Bitcoin prices surged in early May, only to stall and end the month down by close to 8%. That was the worst month for the cryptocurrency since last November. Joining us now is Mike Novogratz, Galaxy Digital founder and CEO. 8% with Bitcoin. That's not even. I mean, you want a bad month. That's not a bad month. For 40%, 60%. Is a bad month for crypto, Mike. 8% is like unch, isn't it?
It's sideways. It is actually is sideways. And if you think about it, interest rates sold off, 50, 60 basis points if you look at the deferred, SOFR contracts. And so less chance of a dovish Fed should be hawkish for crypto in general. And so, quite frankly, crypto's lackadaisical, I'd say. There's a constant bid from retail. We're seeing it through all the platforms. And there's not a lot of institutional excitement right now. And so the dog days of summer started early in crypto. Doesn't make me thrilled, but that's just the reality. That said, there's a couple things that happened today which are pretty interesting, right? WeChat just enabled Bitcoin and crypto trading on the biggest single platform in the world. That's a pretty big deal. Hong Kong is officially allowing crypto trading for retail customers through regulated exchanges, first time. And so we're seeing Asian adoption, and we're seeing, like in some ways, Bitcoin's up 55% or 65% this year. Ethereum's up 55% on lower volatility than we've seen. And so in lots of ways, these have been two of the best performing assets there are.
Last time you were on, Mike, someone took offense that you kind of conceded that a lot of the buying was by people that already own it or people that are already involved, and there's no new adoption, and that's a problem. Is that still?
No, what we're seeing is the new buyers are all small, and they're aggregated on these platforms. If it's Revolut or Robinhood or Square, the Cash App from Square, and they continue to buy small amounts and hold them. And so, in some ways that makes a pretty healthy market because these are long-term hodlers, as they would say.
Yeah.
We're not seeing the institutions come in. That got stopped by a combination of Sam and Gary. Sam Bankman-Fried and Gary Gensler. And so you're seeing lots of interest still, just not a lot of activity.
So, will you help Kelly with her?
No.
You don't want myself. No. Well, we've been talking, and it's totally about what your risk profile and tolerance is, whether you buy a 1-year T-bill or
Mike,
or Bitcoin at 27. You don't like no.
You have to tell me you would take a 1-year T-bill at 5.2% all day long. No?
Listen, you have to have some 1-year T-bills, but right. I've always kind of lived on the risk curve. And listen, we're in a bubble right now, an AI bubble. And so having watched bubbles my whole life, it's a pretty exciting one, and it's just starting. And so it makes actually trading the stock market complicated because, everyone's known that stat, right? 494 stocks of the S&P are unchanged, and the other 6 make up all the gains. It feels early, right? The AI story is just starting in lots of ways. We started using ChatGPT, 2-3 months ago. Bubbles don't last 3 months. They last a lot longer. Bubbles always happen around things that fundamentally change the way we live. Right? Bubbles happen around real things. The story is so powerful, people buy way in advance and get caught up in the frenzy. And so, listen, NASDAQ's way outperformed. It could continue to outperform. It's a dangerous trade, but it would be dangerous.
So I hear him saying, rather than Bitcoin, rather than the T-bill, he wants to chase the NASDAQ. I don't know if you chase NVIDIA. That's what I'm hearing.
I'm just saying that's having a big impact on the psychology of the market, and it's something we got to watch really carefully.
But if you really were going to invest $10,000 right now, would you think $27,000 for Bitcoin is a better buy than a year where you get $500 back?
100%. Because listen, the Fed is going to pause or skip or whatever you want to call it.
Listen to the billionaire. And
then we'll see the data come in. And if the data continues to slow, and it's mixed data, right? The retail services space continues to be vibrant, and the rest of the economy is slowing. But if what I think is going to happen happens, and we see a real slowdown in the second half of the year, the Fed will be cutting rates by October, and crypto is going to be off to the races.
I just think they're taking liquidity out, Mike. Don't you? I mean, you know these dynamics better than anybody, right? Like they're sucking liquidity out, and what's remaining? Okay, it's going into AI, but the fact that it's going into AI is all the less reason why it needs to go into crypto. Yeah, but they will be hawkish until they're not. And the moment this economy really turns, we look at Chile all of a sudden, right? Chile was way ahead of America, right? They raised rates 900, 1,000 basis points, and all of a sudden their economy has just rolled off a cliff. And you'll see, rate cuts really fast. I like to think that's the canary in the coal mine, as one of my friend calls it. Like the U.S. economy will slow. All these interest rate hikes will have impact. The banking crisis will stop lending to small businesses, which will finally show up in employment. It just takes a while. And so I think if we're talking in October, the Fed will have a very different tone, and that will be the catalyst for assets, especially gold, silver, Bitcoin, Ethereum, to head higher.